Welcome everyone to the first video of the channel. Today we will assess Bitcoin perpetual contract on the Whitebit exchange with the daily time frame. The Whitebit charts can be found in TradingView, link in bio. Alright, let's get started. So first we'll just want to highlight the lows. So on the left we can see that there were two lows here indicating strong buying movement. So both of them were liquidity sweeps. The second wick failed to sweep the previous one. Price pushed up hard and eventually became a massive bull run. With that one, we can then use the Fibonacci retracement tool. For this we want to mark the low to the high, and we'll also want to do the high to the low. And the reason why I say this is because this allows us, this allows us to identify where the golden pockets are for the bullish and bearish scenario. When doing it, you want to make sure the node 0 is at the high or the low, and that the node 1 is at the high or the low. After that, you just want to apply the little box on the golden pocket zone. So the golden pocket zone is node 065 to 0618. So with this one, we'll just highlight this for the bearish one, the bullish one, and we'll also do the same for the bearish golden pocket at the top here. Now the difference between these is that the bearish golden pocket is not yet breached, so we'll just label it golden pocket. But the bullish one is, so from our low of 74.6k to the high of 126k, our golden pocket is formed just right here. But that has now breached right at here at level 93.5k. Now, the issue with a breached golden pocket is that it turns into a resistance. I'm sure some of you know what support and resistance is. If not, I have a guide on my TradingView profile, which I will link below, defining what support and resistance is. Now, the resistance, what happens is price reverses off the resistance and continues bearish. If it breaks above, the resistance turns into the support, and price hits the support, it reverses into a bullish trend. Now, what we can also see to add to the second list of confluences for this one is a rising wedge. So it isn't a very nice rising wedge, but it is a rising wedge. And what that means is it's a bearish pattern. When that plays out, it usually targets the three previous lows. So the previous low is 89k, and then after that the next low is 86k, and the next one is the wick, which is the price where it touched but never closed off, 80.6k. Now our target for this, if you were to short in the short term, would be the 86.2k zone. And the reason why this is because it lines up perfectly with the discount zone, 0786. That is a target for if price usually has breached the golden pocket. It also lines up perfectly with this nearly identical equal close on the left with a strong wick. What this means is that there was a lot of buying pressure. People now set their orders here. They are retail traders. So this one is a liquidity zone. Now that is updated. So that is our target idea. Ideally that is our target. And if price can claim this liquidity zone, meaning closing below it, our next target would be the large wick at the very bottom. Why? Because that lines up with the psychological level of 80k. Now psychological levels they end with like 5s and 0s. Example, 100k, 150k, 225k, 5, 10, 15, 20, and so on. 10, 20, 30, 40. You get the idea. That's a psychological level. And that is why the market dumped right after it hit 125k. It swept the liquidity above 125k, which was 126k. Now, on the topic of support and resistances, if we just go back to that, we've got a resistance, which is now the breached golden pocket. We've got a falling wedge, so that is two confluences, and now we got liquidity zone at the bottom. That is a third confluence. To strengthen the bearish scenario, we can then highlight the supports and the resistances on the chart. So let me just do that for you real quick. So in this case, we've got two supports and two resistances. I'll just highlight all the supports. And for the support, we've got an inner support. And for the second support, we've got the outer support. And then we've got the exact same thing, but for the resistance. So let me just update that one. So it's not going to look nice, it's going to look messy of course, but it gives you a rough idea of what you can expect to take place on the chart. So I'll just update this as well. Resistance. And with this one, we can see price has made 2 touches on the inner resistance. 1 touch forming the outer support. I'll update that one too. Outer resistance. Alright, there we go. So we can see that we've now got another confluence. This is a big bearish trend, right? Price made its way up, sat in the upper trend for a bit, and then it made its way back down below the 50 mark zone. What this means is we've got a third resistance. We've got another confluence, a 4th confluence. The 50% mark, since that is also breached, that is now acting as another resistance. So if price cannot break above that resistance and invalidate the falling wedge, it will not be able to hit the target of 100k. A lot of people think that's possible, but the only way for that to be possible is if we have news, and if technical analysis ends up pushing, if there's an individual that pushes the market to break above the breached golden pocket. Now, with this one, it was kind of already obvious that this dump was going to happen. We have a bearish harmonic pattern right here. This one, in line with the 125k, was going to basically confirm the dump. I have a post in my bio which links to the confirmed dump of when it was predicted. People say, oh no, it was just Trump. Well, yes, it was Trump, but the dump was going to happen either way. Technical analysis and fundamental analysis. Fundamental analysis is based on news, technical analysis is based on data. Trump's tariffs basically amplified the loss. I expected a 10k drawdown, while we had a 25k drawdown with the tariffs on top. This was forming a heads and shoulders pattern. So after this taking place from down to the end of the dump to the second inner resistance, we could expect price to reject, which is what happened with these 3 wicks right up here, down back to the middle resistance. And if it breaks below, closes below, which is what it did, we can expect it to hit the support once more, which is what happened. So we can see that there's a massive heads and shoulders pattern right here. But seeing as that's now played out, we expect a pullback. And that pullback is this rising wedge right over here. But with every pullback comes another drawdown. And that is when we expect this next drawdown. 1. Liquidity zone below. That's confluence 1. 2. The 50% line. That is a second resistance. Sorry, that's the first resistance. Then we got 3. The golden pocket, breach golden pocket. That is the third resistance. And then we got the falling wedge, which is the 4th confluence. So everything's lining up pretty well. But in order to see a bit more hope in the bullish scenario, we can at least use the anchored volume tool, which is what I have at the bottom here. That can just be found on the right hand side of your menu when you're in trading view. This we want to line it up from the lows of 76k my mistake. And we can see here, interesting, it lines up at 1100, my mistake, 111k. What that means is it's right next to the 110k psychological level. Again, 5, 10, 15, 20, 10, 20, 30, 40. Psychological levels ends in 0s and 5s. So the 110k is a strong psychological level, the 105k is a strong psychological level, and the 100k again is a strong psychological level because it lines up perfectly with the 0.5 node. So that is the first target for a bullish scenario. The second target is the 108k zone to the 112k zone. The reason why this is because we've got a lot of volume appearing from this whole area of consolidation. Consolidation, manipulation, etc., you name it. Everything there caused a lot of volume to take place. And the anchored volume profile acts as a magnet. This little line right here is called POC, point of control. Price always hits that. It doesn't hit it if a new set of volume bars appear, which is what we see happening in the bottom. So the only way for price to make its way up to tag the POC is if it can close above the breach golden pocket with a strong buy order. But if the volume on the left hand side here starts accumulating, the POC can update and appear at the average 90k. And we don't want that. If you're a bull player, we don't want that. If you're a bear player, you want that, because then price will continue further. So this is the bullish and bearish scenario we can see take place in the next couple of days to weeks to maybe even months, the next 2 to 3 months. If price can break above the golden pocket, we can see another 110k hit. If price fails to, then we will see 84k, 82k, 80k, and potentially even the end of it, 74.9k, which is the previous low. So hopefully this video was informative to you, hopefully you learned a little bit, and hopefully you did enjoy the assessment. If you guys do have any questions, let me know in the link below. If you do enjoy the content, make sure to just, like, subscribe, follow, all that stuff. I would greatly appreciate it, as I'm just starting off. Thank you very much, and thanks for watching. Adios.